I owe the IRS. Should I bother filing my taxes? Hello, welcome back to the channel. Thanks for joining me. I'm Anthony Parent with IRS Medic. Today we take a look at a common problem that hits business owners and taxpayers, finding out they owe more money than they expected to the IRS. This could be the year you prepare your taxes and maybe you find out you made more money or you didn't put enough aside. Maybe this is the first year you are self-employed and you have learned about the horrors of self-employment taxes. Regardless, like millions of other Americans, you are now facing the fact you're a little bit short of money for the IRS and wonder if you could buy some time you don't file your tax return. So should you? Can you buy time by not filing your tax returns? I can answer this question easily. Yes, you can buy time without filing. You might be able to buy a lot of time, but do you want to? Does stonewalling the IRS help? Well, let's think about it. If you don't file your tax returns, it's not like the IRS completely forgets about you. Rather, you're dumped into something known as the Automatic Underreporting Unit, or AUR. AUR will prepare returns based on information it received from others, like 1099s reported to your EIN. That is, if you don't file a tax return, the IRS will file one for you, but don't expect them to do you any favors. It's not like they're going to optimize your deductions, and maybe they'll even double count income. Now, in true IRS fashion, AUR isn't exactly automated. The IRS actually backs off their automatic assessments. Now, why is that? They can't handle the influx of calls these automatic assessments generate. So the IRS processes only as many automatic returns as they can handle. That means if you don't file, it can really be years before the IRS does anything about it. We are hearing from people who are unfiled in 2016 and earlier, and the IRS has yet to bother them. Well, I suppose it would be if the IRS truly went away. But if you don't file the taxes, the IRS can assess your tax bill at any time, so they truly aren't in any rush. For example, if you're unfiled for your 1999 tax return, the IRS can right now hit you with that tax bill. It's rare, but we have seen 1999 tax year penalties assessed in 2018. It does happen. So you see, this wait-and-see approach can really backfire. By the time the IRS catches up to you, it might not be just 1 year you're behind on, but several. Instead of a small problem, it's a bigger problem because the IRS allows you to ignore it. Bigger problems can always be solved, but the headache and cost typically increases. The other issues, we've seen this a lot, sometimes our clients don't owe the money what they think they owe. They missed a valuable deduction or they just completely bungled a return. And maybe it's not as bad as you thought. And here's another twist though. You know how I said that if you don't file, the IRS can assess you at any time in the future for this tax year? While the IRS has unlimited time to assess you, you have a very limited time to claim a refund. Billions and billions of dollars are left behind each year because people don't understand the 3-year and 2-year time limitations on claiming a refund. So sometimes by not filing, taxpayers lose money they had coming to them, all because they were operating under an incorrect assumption. For personal 1040 returns, usually not. The reason is these cases are hard to prove if you don't file. If you file a return that's false, that's evidence used to establish your state of mind. But without anything filed, the government's job is usually harder. So we typically don't scare people with criminal charges, but rather point to the fact they're likely creating a huge civil mess. And also, you'll have a difficult time settling taxes without being currently filed. Because if you want to make a deal with the IRS, expect them to demand your filed tax returns that you missed. However, you might not submit all your returns. There's a few different rules for how back you want to go. This is something that takes some real thought and strategy. The typical 6 years is not always the best idea. You have to really think hard if this general rule is best for you. And then there's that other problem. IRS is one of the easiest creditors to delay. If you don't make a car payment for 90 days, you would expect to wake up and see your car gone. It was likely repossessed. But for the IRS, 90 days is a blip. Expect little or nothing to happen. Perhaps not even a letter if you don't file. The IRS moves slow, which can be fine if you're trying to stonewall them, but might not be so great if you're looking to settle this and get this behind you as soon as possible. So our advice tends to be file your taxes even if you owe money, especially if you owe money, as delaying the IRS can often just delay your growth. Once again, thanks for watching. If you like this content, please like and share it below. If you think you have a tax need, let's talk. Our website link is below. And stay up to date with our videos. Ring the bell for notifications. This is Anthony Parent with IRS Medic.